Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hi friends, this is Aditya Vora here. Hope you guys are doing well. It is rightly said, जो दिखता है वही बिकता है. In fact, in today's cosmetic world, all that glitters is indeed gold. You know, some months ago, I was listening to the chairman of Bajaj Auto, Mr. Rajiv Bajaj. In a very candid conversation, Mr. Bajaj clearly stated that the most important person in Bajaj Auto is not the chairman but the salesman. Because at the end of the day, he is the guy who is going to convince the customer walking into the Bajaj Auto showroom to buy his bikes. Let me talk about one more real life experiment before I tell you why I am harping so much on the importance of marketing and advertisement. You know, a few years ago, Pepsi ran an advertising campaign where people were given two unmarked cups. One was filled with Pepsi and the other one was filled with the rival Coke. They didn't reveal which cup was which. The audience was asked which one they preferred. Surprisingly, more than half chose Pepsi. The reason I say it is surprising is because Coke has a much higher market share than Pepsi in USA. So why such a contradiction when it came to taste? A neuroscientist, Dr. Reed Montag, decided to solve this problem. He assembled an audience, recreated the whole experiment and monitored their brain activity. His findings were in line with the advertising campaign. Pepsi produced a stronger response in the reward center of his subjects' brains. But the neuroscientist knew that a great product isn't the only factor in a purchase decision. So he did the experiment again, but with a big difference. This time he told people exactly what they were drinking. And guess what? Coke won. The subject's brain activity changed too. Regions associated with cognition and memory were lighting up in the test. People were letting their memories and perception of Coke shape their preferences. In other words, brand power triumphed over taste buds. Hence, Pepsi was left behind. You know what R&D is to pharma companies or what employee strength is to IT companies, advertising, marketing and creating a brand is to FMCG companies. You know, as analysts, we run screeners as a starting point to identify stocks to invest in. These screeners yield results which include growth stocks, momentum stocks, undervalued stocks, dividend yield stocks, and so on and so forth. While the market has barely fallen 10% from the peak, there are certain small caps and mid caps which are down 30 to 40% from their peak. I believe this is a perfect time to run screeners and indulge in cherry picking of good quality small cap and mid cap stocks. So over the weekend, while running a screener, I came across an interesting stock in the FMCG space. It is available at a close to single digit forward price to earnings multiple. And by the way, if by attractive FMCG stock you are thinking of ITC, then no, it is not ITC what I am talking about. Anyways, coming back to the stock I discovered, when you find an FMCG stock at such compelling valuations, it can either be a value buy which will make you at least 2x, 3x return, or it is a value trap. In the second case, there is something wrong with the company which we need to figure out. So I immediately calculated the most important metrics used in the FMCG space, which is advertisement expenses as a proportion of sales. The reason I emphasize the importance of advertising and marketing is because for an FMCG company, incremental sales on new product launches are dependent on marketing of the product. A backdated analysis of the company in contention showed two important trends. The advertisement spends as a proportion of sales as well as absolute spends have been rising over the past 3 quarters. And secondly, advertisement spends for this FMCG company are almost 1.5x than its competitors. Now, there are two ways to look at it. The first approach or the first interpretation is what I call the encouraging approach. Higher advertising and marketing expense would mean higher brand visibility, which would lead to higher sales. For the company in contention, I checked why the advertising expenses are going up. I found out that the company has launched 5 new products post-COVID. The value picker in me took this point in the company's stride. I mean, you don't come across FMCG companies with ROE ROCs of more than 20%, dividend yield of 3% plus, and the cherry on the top is that valuations, which is available at almost a single digit forward P ratio. Now the second way to look at it is, or what I call the cautious approach. In the stock market, absolute numbers have very little significance. When numbers and company performance are viewed on a relative basis, that is when bigger picture starts making sense. The question is, why does this company in contention have to spend almost 1.5 to 2 times the money which its peers are spending on advertising? That clearly indicates it is not the market leader, and it also indicates that competition in the industry is intense. In a competitive intensive industry like FMCG, demand elasticity is extremely important. By that I mean price increases are normally done by the market leaders, the other players are normally price followers. In the battle between arch rivals Pepsi versus Coke, we saw how advertising led to brand creation. This changed the perception of the product. So in conclusion, first, what is the Indian company I am talking about? Bajaj Consumer Care Limited. Viewed as a single product company by investors over the past year, Bajaj Consumer has upped its game. 85% of revenues come from a single product, which is expected to come down over the years. Let me explain you the industry structure. The hair oil category has 3 main oils. One is a coconut hair oil, which accounts for roughly 58% of the industry volumes. Second is the amla hair oil, which accounts for 28% of the industry volumes. And lastly, the almond oil, where Bajaj Consumer is the market leader, which accounts for 14% of the hair oil market. The problem is this. While it is the market leader in the almond drops hair oil category, the industry volumes are skewed towards the coconut hair oil category, where Marico is the market leader. So in that case, why should investors focus on this single product company? Well, 2 things in my opinion. Firstly, there are many new initiatives which the company has embarked upon. To start with, the company has undertaken new product addition to become a total hair oil player, which is likely to give it access to the underpenetrated South Indian market. The increasing share of direct presence would be levers for achieving sustained volume growth. The company continues to scale its new launches, namely the Bajaj Pure Coconut Oil and Bajaj Coco Onion Hair Oil. It is trying to shift its focus on premium categories, which fetch you higher realization, such as a hair serum, hair mask, almond drops extension, anti-mark sunscreen lotion, and so on and so forth. Currently, Bajaj Consumer addresses only 14% of the total hair oil market, which is dominated by the coconut oil, which accounts for 58% of the total hair oil market. I am sure the brand Parachute by Marico is synonymous with coconut oil. What Bajaj Consumer is trying to do is to enter this category, which accounts for 58%, by launching new products. The initial goal is to at least be present in all the hair oil categories. By addressing other hair oil categories, Bajaj Consumer can address at least 35% of the hair oil market from the current 14-15% share. Now coming to the fastest growing medium, which is the e-commerce segment. The company is also upping its game in the online e-commerce space. In fact, it has launched 11 new products under the brand Soul exclusively for e-commerce, that is sale on Amazon, Flipkart and other websites. In terms of advertising spend, 19% of revenues were spent on advertising in fourth quarter of FY22. this is expected to remain elevated. The company is clearly trying hard to push its product in the market, which is dominated by formidable players like Marico and Dabur. Now, the second most important perspective for Bajaj Consumer is the undemanding valuations. I mean, you are getting a cash-rich, high dividend-paying company at close to a single-digit forward price-to-earnings multiple. The downside is limited with high margin of safety, at least in terms of price. So friends, I believe you should definitely keep this stock in your watch list. Only time will tell if advertising budgets, which are key in the FMCG industry, do the magic for Bajaj Consumer, or perhaps the competition will continue to dominate market share as well as mind space in the hair oil category. Thank you for watching my video, and do write to me if you have any comments or suggestions.